Let's just start with what Eamon was saying about a fiscal response. What do you think is necessary right now?
Well, first of all, I agree. I mean, we really, I think, President has not started this well. We need leadership at the top. I mean, Jim Cramer was totally right last hour. We need leadership at the top. For instance, the betting markets are already saying, hey, you know what? I think Biden might be the next president if you take a look at the flow. If he comes out with a really strong statement, he might be able to clinch it. We need leadership at the top. We need a plan. It seems scattershot. I'm very glad I'm hearing that something might come, and it absolutely does have to come. What to do, what kits, testing, again, unemployment compensation, people that have to stay home to be tested should not be able to, to lose their income. I mean, this requires emergency action, and we need that leadership at the top. We also, by the way, and I know everyone's going to say, oh, it's not going to do any good, but the Fed needs another 50 basis points cut.
What does that accomplish?
Well, it'll accomplish because there's trillions of dollars of loans of these small businesses based on the prime rate, based on the LIBOR. And they'll all go down. It'll help the cash flow. The cash flow is going to be critical. I mean, it's not going to solve the problem. It's not going to cure the virus. But it just gives another bit of help. We hope that the Fed can't provide loans.
Recession?
I would say, you go down another 50 basis points. That's what I would recommend. I mean, again, this is very marginal. I think leadership at the top, I think fiscal measures are much more important.
Yeah.
Yes.
Any concerns overall in terms of the market and the market dynamics? You know ETFs well, Wisdom Tree, obviously. They're so important in our market overall, where price dislocation is so significant, Professor. Any concerns at all about that all operating properly?
Well, I think, personally, I think things have gone extraordinarily well, not in terms of prices, but in terms of trading. I mean, we really didn't need that 15-minute point halt. This was designed 20 years ago. I think we have trading, but the ETFs are trading. Stocks are trading. You're not going to get the liquidity, of course, you did before, but people have to get it off, can get it off. We don't see any, crazy gaps like we have before. I mean, so I actually think that this market has, given the speed, which is unprecedented in the decline from highs, we've never had in history, has traded well. So I think that's not a concern.
Not if you're a Robinhood user. That site is down again. The free trading app that caters to younger millennials has had outages all of last week. It's down again. So, Professor Siegel, if you can have access to your brokerage account right now, what would you be telling people to do? What moves would you make, if any?
Well, right now, I think from a long-term standpoint, there's value out there. Could it go down another 5-10%? Of course it could. And 15, and then we'll have one of those bargains that you get, once in a decade or a generation in terms of buying stocks, and people who've done that at that time. But right now, at this particular time, if you're young, you got your 401k, and oh my God, I should have gone out 2 weeks ago. It's at this point just hold. I mean, again, as I pointed out to you, forget about this year's earnings. Maybe, people talking about zero increase, 5% decrease. Suppose it's 20% decrease. That's disaster. But look towards 2021. Are we going to get back to something more normal? Yeah. And what is the stock market trading at now on 2021? Even earnings that are the same as we had last year, 16, 17. These are values that pay in a low interest rate world. So my thing is right now, stick it out.
Your take on how stimulative helicopter money or household relief, however you want to phrase it, how effective is that? What's the multiplier when the money that households would ostensibly get is tougher to spend if you're being told you can't go to the movies or fly or take a cruise or even leave your house in some cases, hypothetically?
Yeah, well, first of all, I say that although there are supply disruptions, this is a demand shock. Exactly what you're talking about. People are just going to stop doing the whole entertainment sector of our economy. Could totally tank. But what we need is, I'm worried about the people who don't have a corporation that's going to continue to pay. They're working on their own cash flow. Suppose they're waiters or the food deliverers or whatever it is that suddenly is going to disappear. We have to be able to provide these people with cash. We have to give them the ability to do that. We also have to give them the ability somehow, if this gets worse and we decide to shut down like Italy or something, that bills can be delayed 30 days. Mortgages can be delayed 30 days. People won't get the cash flow. It's not going to be a total disaster. I mean, we're going to get our economy back, but we have to make, we have to make those sorts. Those are much more important, I think, at this particular point.